Welcome to Finance at JCL. Warm welcome to you, and a particular thanks to those of you that have recently subscribed. It's much appreciated. So here is my January view of what happened in the portfolio during the month. So let's roll the intro and get straight into it. So here are the 5 topics for today. We're going to go straight into the portfolio value and run rates. As a reminder, at the start of the month, the end of December, the portfolio was at 47.55 and now increased dramatically to almost 43,000. It's been a really good month. £300 has gone in and £1,900 improvement in performance, which is dividends and appreciation stock price. Of course, the end goal is still that £1 million, ideally by 2050. If I want to hit it by 2050, I need to be at 45,990 at the end of the year. So essentially another £3,000 by the end of the year. I'm due to add 300 a month, another 3,300 a month to the portfolio. So if everything stayed as it is now, plus dividends coming in, I'd exceed that target. We don't know what the market's going to do. What that does mean is my required rate of return hit by 2050 is 9.5% a year. So I need to get 9.5% a year compound annual growth rate on average every year for the next 27 years. So a reasonable ask to keep that discipline over that long period of time. But it's the challenge. It's a challenge to myself. So dividends received in the month, and the biggest is Alpha Metallurgical Resources, £76. That's over half the value. That is a coal company. Really well, my best ever holding. Notable contributions there from Investec, Sturm Ruger and Co, and Bank OZK as well. So great month in January for dividends. Let me know in the comments below what your biggest dividend is that you received in January. Just before we move on to the next section, really big shout out to welcome Martin, who's joined as a Patreon supporter. Welcome, appreciate your support, and welcome. If you'd like to check out Patreon, there is a link in the description below. If you'd like to join us, join Martin. So what's happened in the month? I sold a lot of my Alpha Metallurgical Resources position. I sold some at 138 in the 150s and in 160 range. So I'm left with, I think, 9 shares. It's a cyclical company, so the plan is it has to be sold at some point, and we're near the peak of that cycle, so I wanted to take some money off the table. Now the buys, this is busier than it would be in a normal month, but my usual monthly input to the Fundsmith Equity Fund, so another £100 went into that, and I had quite a big cash position, over 20% at one point. I've added a bit to the world index, and I'll probably build that position up. Just somewhere to put the money instead of having such a large cash position. I'd rather have a position close to 10%, 20%, because it's better to be, in the long run, more fully invested, because if you take out those really good days in the market, you lose sort of half your return in the long run. 2 new holdings, brand new holdings, Google and Citigroup. Now with Google, I've done a video on that one, actually with Citigroup as well. So if you want to see the detail behind those, I invite you to check out those videos. Google's got into my quality stock pot, Citigroup into the dividend stock pot. Portfolio looks like this. There's 8,000 in cash. Biggest section is the sort of quality stock section, getting on for 11,000. See there, dividends next, just over 9. Managed by others, getting towards 8. Stocks that are unclassified that don't fall into those buckets, around about 5, and then cyclicals just under 2. Want to be adding more into that quality bucket and the dividend bucket. Now that cash position is a bit too big. I'm not going to rush and deploy it all because I made that mistake in the past. I want to be very selective about the companies I buy. Do they fit the criteria? Do they fit the strategy? So let's get into the key bit now, the performance of all of the holdings. So in the quality pot, you've got Bank OZK, the biggest holding, and it's now hit the 100% club again. Rejoined. Really good month, up 22 points. Micron's recovered a bit, still down 9%, but up 14 points in month. And the big mover is American Express, up 27 points in January. That's plus 95%. looking to hit that 100% club, which Unilever just dropped out of. It's now down to 99. Bit of a shout out to Skyworks, up 18 points as well. I went in quite small, was hoping to build that holding up, but it's shot up in the short term. So I'm stuck with a smaller holding that I'd like, but I'm not going to buy at the current valuation. So the only one on this list that's done really badly is Intel, down 41%. Really disappointing performance on that one, but you're not going to have a portfolio where 100% is up. I think in the long run, Intel will still come good. Now, on the dividend side of things, again, this is a really strong portfolio for me. Almost everything is up. And the big movers in month is US Bancorp up 13 points, BT up 11, also Direct Line down 13. It's been a bad time for Direct Line recently. I'm now down in total on that. In fact, on capital side, I'm down a lot, but the dividends over time have kind of made that back. So I've held it for years, and I'm down 1%. Not been a good long-term investment to this point. But what we can say is Unum Group's been a fantastic investment, as has Aviva, two biggest positions here by far, and they're up big guns, 124% Unum, and Investec as well, up 282%. This is a strong part of the portfolio. Now, there's quite a few companies here, and in the quality section as well. I'm looking to trim, and we'll be selling Sturm Ruger & Co. shortly. Managed by others. Now, this is a really interesting one. If you look down that total return column, there's not a single one that's down. So I had this as part of my portfolio. I want it to be about a quarter, and it's there to protect against my failure. So if I do badly, make some bad calls, I'm probably not going to lose money on this section, so it kind of keeps me afloat. Now, I might not make the 9 or 10% a year, but I shouldn't be making negative return on it as well in the long run. And yeah, everything's up here. It's great. So I'm going to keep this going, a bit of protection, a bit of a stabilizer. Massive mover there, Fidelity Australia up 9%. That's quite a lot of movement for an index in 1 month. And there's a couple of good performers there. Linsell Train up over 100%, and the UK Smaller Companies Fund as well. Next biggest section is that what we're calling unclassified. They don't fit into any of the other categories, but I happen to own them. Now, if I was following my investing strategy, the new portfolio, I would not buy any of these positions. They don't hit the cyclical, dividend, managed, or quality criteria. When I started that, I already had a portfolio. So all of these will probably be sold at some point. They're not long-term holds. Certainly, I wouldn't buy them now. Alibaba's had a great month, up 14 points, as of S4 Capital. These are two companies that I'm really confident of making a decent amount of money in. I continue to hold. Cumulus Media, I think, is grossly undervalued, and of course, there is a quality company. Those top four, I'm keeping them for the short to medium term, because I think I will make money of them. Then I'll be selling out those positions in due course. Bottom three, I'm not confident about making money on. Tenant should push forward as China improves. GAN, Voyager, question marks. And then the cyclical pot, which has dropped because I've sold a lot of my AMR position, as mentioned earlier. AMR and Ramaco, both coal companies, both up well over 30 percentage points in month. Great bias by portfolio. Bit of a recovery from Turtle Beach. And the bottom three there are crypto related, which is one in the last month, but they're negligible holdings really. And that's it. That's the portfolio review. Check out the videos on screen. Got the Google and the Citigroup video to go into detail on those, as I mentioned earlier, in terms of my new buys in the portfolio. You don't want to miss it. Check them out. Maybe it might be right for your portfolio.